This program is sponsored by Wilsey Asset Management.
Welcome to your commercial-free, uninterrupted investment show, sponsored by the SEC-registered investment firm, Wilsey Asset Management, a fiduciary firm owned and operated by President Brent Wilsey, who has been putting clients' investment needs first for over 40 years. The Smart Investing Show has been giving unbiased financial information for over 27 years on local radio stations right here in San Diego, providing you with fundamental analysis on stocks and investments you want to know about. Now, here are your hosts, Brent and Chase Wilsey.
Morning, and welcome to the Smart Investing Show. I'm Brent Wilsey. Just about 8:01. I think we're kind of early today, it seems like, but welcome to the Smart Investing Show. Again, I am Brent Wilsey, here every Saturday morning talking about your money, the economy, investing, and how to make your net worth grow. And with me is Chase. Good morning, Chase. How you doing?
Good morning. Doing well.
We timed that just perfectly, didn't we?
We timed it just well. Yes, we did.
Well, we got a lot to talk about today, and as always, we take your phone calls. Talking about what you want to talk about, giving that unbiased, no strings attached, fundamental opinion on what you want to talk about. Phone numbers 866-577-2473. That's 866-577-2473. 2473, but we always cover a few things here that were important last week in the market. Let's start off with, let's talk about how you're feeling like your stocks went nowhere in September, except down. That's because, well, they did. This September was the worst of September dating back to 2011, 10 years ago. But don't despair. If you hold good quality businesses with strong fundamentals, the good valuations will get you through if you're patient.
Yeah, and a couple numbers to kind of expand on that topic a little bit further. I mean, we saw the first 5% decline in 227 trading days. And it's like, what? We went down? And a 5% still not much. But the thing is, you look at it, only 6 times in the history of the S&P 500 has there been a longer stretch without a 5% pullback. So if you're panicking over this, this is not normal to see this type of stretch without this type of volatility. I mean, it just doesn't happen. So don't panic over it. It's normal. It's a healthy pullback. You could see what I'm going to say, a healthy correction, which is a 10% decline. Don't panic over that if we see it. I don't think we're going to see a correction just yet because I think there's still too much money in the economy to kind of create that floor as I've been talking about. Could happen. Not going to make any different changes on it, though.
And it's not only that. When you watch the business news, you see these pundits on there, oh, well, it's down. I'm buying now. You're down 3-4%. I mean, and this is the attitude that they have, is that there's a lot of people that don't really know how to invest and understand what's going on, so they're immediately coming back in. And that will happen for a while, but eventually they have no more cash left to go into, and then things will go down further. And this is why this happens. And I enjoy it as much as the next guy. It's great not having to worry about, client's going to call because they're down, 10, 15% of the portfolio, which does and will happen, and you cannot avoid it. I just love the phone calls. Well, if I cash in now, I can buy back when things are lower and then write it back up. You don't know where the bottom is. You don't know when to buy back in.
I was going to say, you're right. That is true. If you do that, you're right. That is the right way to do it. But it's impossible. If you could do that, you'd make 100%, more than 100% every single year. If you could time the ups and downs, you'd avoid the big pullbacks, then you'd get all the excess of the upside. It's just not possible to do.
And in theory, if you knew when it happens, but you just don't know. And that's the thing you have to realize. And that's why your famous investors like Warren Buffett never did it. Because, and I've seen people like, it's kind of funny. The people that suggest it are the people that don't have a lot of money, because I think they've tried it throughout the years and it doesn't work. And I don't know why they think this time would be different. You're far better just riding through with the good companies you bought at good prices. And it doesn't mean they're not going to go down. They will go down, but they will come back above and beyond. And you cannot time the market. We've known this for years, but it's kind of one of the things we talk about in our workshop. Everybody thinks they can time the market and do well with it, and you can't.
No.
So
It's impossible. And I did want to kind of touch one more thing. So, it wasn't just the S&P 500 that did see a decline in the month of September. That actually, we did see the NASDAQ fall and the Dow Jones fall as well. They all saw 5% pullbacks. But it wasn't just in the month. Actually, for the entire quarter, the Dow and the NASDAQ actually both had losing quarters for the first time in 5 quarters. And the S&P, they kept that streak alive with a 0.2% gain for the 6th positive quarter. So, it does seem like the last few months we just kind of been trading in this range that it's just going nowhere. And that's one other thing too, is we might not see correction, but we just might not see a lot of appreciation because things are expensive. But there's also, as you said, a lot of cash. So there's 2 kind of ways to counteract, I think, that this activity is you can't go, I guess in theory, you could go up to 30 times earnings. And we saw that during the tech bust, and we saw how that happened. But it's just not, I think, a likely scenario as well.
Yeah, I don't think that will happen this time. I think we're pretty much to reach the top for the high flyers. But there are underneath, and we've seen things like energy. Energy's turned around. There's things in the market that are good valuations you can buy and be patient with them and not worry. And we've talked so many times, I think everybody's going to know what I'm going to say, is that how the S&P 500, about, 24% is based off of about 5 companies, which actually some of those companies have pulled back a little bit, so maybe it's changed a little bit. But we talked, I forget where it was at, but how we have a company that's growing like at 10%, projected to grow 10%, in the future years. But I think Apple, their growth, and you look at it, it's not.
I think as you said, we looked at it last week. I think it was like 1% next year, and then even the growth going forward is pretty subdued.
Yeah, and the higher you go, the harder it is to grow more. And that's the thing people don't realize. Everything has its peak. And but we love Apple. I think Apple did fall below 140 this past week.
Yeah, it did.
I don't know if it closed out or not. But and even at that level, people, time to buy. The high was like 157.
I know. You talk about these financial pundits. It's not even buying the market. They're like, I really think this pullback that we've seen in big tech, it's really a great buying opportunity. I looked and I said, they fell like 4%. What do you mean that's a buying opportunity? They've gone up 100, 200% over the last few years. How is that a great buying opportunity? And I'm okay, maybe it's a buying opportunity. But a great buying opportunity? Yeah. That just seems a little excessive to me.
Well, and I will say the same thing was said during the tech boom and bust, and a lot of those people busted because they were buying so high and doing the wrong thing. Actually, we've also been talking for many years. I've been talking about how we only invest primarily in United States-based companies and strictly avoid anything in the Chinese market. Interesting to note that the MSCI China Index is down 30% since its peak in February.
Yeah, and I don't have the exact numbers on this here, so I do know that China's been a tough place to invest, and it is something that we look at saying is it's just not worth the risk to us, and as I said, it just hasn't paid off. It's gone nowhere.
Yeah, well, looking back to the inception date of the MSCI China Stock Index in 1992, investors have earned an average annual return of 2.2%, including dividends. Now, I hope you have been one of the investors that we have agreed with me and avoided investing in Chinese market. I still hold strong not investing money in Chinese stocks. We've talked about this for years, and people, but I'm up this, I'm up on that, and so forth. Yeah, you're up now. A lot of that is gone, and again, it seems to be getting worse going forward for China, not better.
Yeah, and I do know that they've kind of seen some issues, and I saw Tesla is now having kind of some issues in China. Not surprised by that. And what a surprise that NIO and the other Chinese auto manufacturers, they're doing really well there. And I just, China doesn't want foreign competition. They want their businesses to do better. So I worry about that. But it's funny, I say they want their business to do better, but they also don't, because they're a communist country, so they want their government to do better. Is the end result that they're striving for. And
they don't want competition because they want to own those companies. And again, a little secret here, China is a communist country. It's not a free capitalist society. It is a communist country, and they want to have the benefits and the growth of capitalism, but they still want to control those companies, which they do. And by the way, where's Jack Ma?
Yeah.
You know, I mean,
I don't know.
You get too big, they're going to shut you down. They're going to take things away. So I would have $0 invested in China. And again, check these emerging market indexes, these foreign mutual funds and ETFs. I'm sure they have something in China.
I'm sure a large percentage of it comes from China.
And I remember people saying, oh, but you don't get it because there's like billions and billions of people there, the consumption and so forth. Yeah, I get that part, but I don't want to be part of a communist country that controls my. I mean, even here, look how here in the United States we kind of balk at things. Well, we got to get the vaccination. Being forced to. It's 10 times worse there in China. So I just do not recommend. And if you have any money in Chinese stocks, I'm going to tell you, if you came to us, we'd say, we want to sell that.
Yeah, it's as I said, it's just not worth the risk because you just don't know what the government's going to do. And I mean, you've kind of seen them force their hand. I mean, we've talked about kids in China. Nope, no video games during the week, and you get 3 hours on the weekend. That's it. Talk about the gaming, and I'm talking more of the gambling type gaming. They came in, stepped down on that. Technology, they're stepping in on that. They can put their hand in anything they want to put their hand into, which is just such a red flag in terms of, oh my gosh, what am I going to do now if they come in and they crack down on the company that I own? I mean, that's going to just stifle that business.
Right. One thing I've not seen lately, I'm not seeing anything on the Taiwan situation. I don't know if that's just kind of cooled off or it's the
China being quiet.
Being quiet, the quiet before the storm or whatever I think the saying. So hopefully that's not the case. But China does worry me. I mean, it's worried me for years because they're getting bigger. They have money now, which they didn't have before. It's something that we have to be prepared for, but do not benefit China by investing in their companies. Yeah,
and I talk about Taiwan a lot, and I mean, we've talked about this a lot on the show, but want to reemphasize, I mean, like Taiwan Semiconductors, I mean, them and Samsung are the major chip foundries, and Intel's trying to kind of get into that. They're their name in the hat there, so to speak. But I do worry. China is not stupid. They think Taiwan is theirs. They want to control Taiwan. If all of a sudden China steps into Taiwan, I'm very concerned about the global chip situation, unless we can actually diversify away from Taiwan Semiconductors. So that is something to keep a close eye on in terms of global politics and global business, is if China starts to kind of move in. I mean, we saw Hong Kong, and all of a sudden we stopped kind of hearing about what's going on in Hong Kong. It kind of went quiet. I worry that the same thing could happen on Taiwan as well.
Yeah. You got Taiwan and Hong Kong are two areas that I think could be problems in the future. And you're right. I mean, and China would love to do that because Taiwan Semiconductor, where they would control the chip market, they could control the world. And that's why we need like companies like Intel here to do more so that we're not so dependent on other places. That's the problem being a part of a global economy. You can't do things yourself, and it is a situation that we have to kind of deal with. So, but by the way, I'm going to get the phone numbers because we're going to do one more topic here, and I will make sure that people, when they call in, we'll get to you because, by the way, we're on from 8 to 9 today, so you got to call in early. 866-577-2473. That's 866-577-2473. That will get you through for your unbiased, no strings attached, fundamental opinion about what you want to talk about. Speaking of calling in, last week we received a call on the radio show with a listener asking about the movie theater chain AMC. Well, I asked a gentleman if he had been there lately for a movie. He kind of laughed and said no. And then I realized, well, wait a minute. I've not been to an AMC movie theater since pre-COVID myself. So that Saturday evening, Christine and I, we headed off to the AMC movie theater in Poway to see what, going to that type of movie theater was like. And I have gone to other theaters. I went to the Lot a couple of times, but not to an AMC or an Edwards or so forth. But so we went there. And I remember it used to be on a Friday night, Saturday night. You would go there, line to get a ticket, line to get popcorn. The lobby is just jam-packed with people. Well, when I walked right up to the window, got my ticket, and then the long way to the concession stand, I just walked up and was like, can we get popcorn? And there was more workers in the movie theater than there were people in the lobby. And it was just kind of amazing to me. And then we walked in there. Now, part of it could have been a woman sitting next to me. Hopefully she's not listening here. But she's eating her popcorn. It's getting all over my chair. Like, okay. So I had to clean off the chair. But on the floor, there was like popcorn. And it just didn't look very clean. And then also, too, it was not full. And keep in mind, that AMC did go to the bigger chairs. So I think they only have maybe 50 seats in there.
Yeah.
There were still a few seats open when the movie was going.
Yeah.
So I'm concerned, and I bring this up because of, did you check to see, I know we talked about that AMC just talked about buying back stock?
I did not.
You did not? Okay, because I think they were going to buy back stock. I do not know why you would want to buy one of these chains.
No, I mean, I don't see why people are still buying the stock other than because it's gone up tremendously.
Yep.
I mean, it's not a booming business by any means. And I always tell people, if you buy technology companies and it trades at high valuations, well, at least it's a growth company. It's not our value philosophy that we do at Wilsey Asset Management. It is a deferring, but at least it's a philosophy. It's a growth business. They're going to be growing their earnings, and you hope that they're able to grow into that multiple.
Yeah.
AMC is not a growing business. I mean, it's not a value business. It's not a growth business. It's just purely a gamble.
Right.
And that's all it is. AMC and GameStop, they're casino stocks is what I'm going to call them. I'm always saying casino stocks. They're not casino companies. Yeah, but it's the same thing as going to the casino when you're trading in these businesses.
Right. And again, I thought the theater chains would have to do something to bring people back. They're not doing it. At least the AMC movie theater chain that I did. Now, maybe somebody else has gone and got a different experience and so forth. We actually did a post on this on social media to get some responses, and people, a lot of them seeing the same thing, saying, and again, why would I go to the movie theater when I can get almost the same movie at home streaming? And when I have to go to the bathroom, I can pause it. I can go in my kitchen, get ice cream or get what I want for kind of free. The movie theater chains have to do something different. I would not be investing. And I think AMC, maybe someone would call Bob, but I think it's around $35, $40 a share. I just don't see how these chains are going to make things to where people, especially younger people, I'm older, obviously, and I have great memories of being date night and going to the movie theater and had this nostalgia feeling to it. I mean, for you and people maybe in their 20s and stuff, like, no. Why should I go to the movie theater?
Yeah, I don't. It's not the same thing. I remember being in middle school, and that was the thing to do. You'd go to the movies, and I don't think it's the same any longer. I don't think kids do that. I could be wrong. I don't have a middle schooler or anything, so I'm not quite sure. But I don't see them in the shopping center when I was a kid that I would go to in Poway. It's the same AMC you went to. I remember going to that shopping center a lot. But it's definitely changed. And I did look up the AMC stock buyback. I didn't see anything about a buyback, but they are buying back $35 million in first lien debt is actually what they're buying back, which is a positive. But I don't know why they have outstanding debt with all that stock they issued. They should have tons of cash. So
I'll give you a clue why. They're not making any money. Not enough people go to the movie theaters, and it used to be the concessions were a big thing when you make money out. And the thing too, AMC did go to the bigger seats. Well, now there's less people there, so therefore they're buying less concessions. Brendan, you're looking over here like you have a comment. I think you got a comment about the movies. Do you?
I am begging for these comments. Okay, so here we go. So I went to a movie called The Quiet Place or something like that. I think that's what the name of it is. And I cannot stand hearing other people eat popcorn, but even me, I was chewing popcorn, and I didn't realize how quiet this movie really was. So was
the movie quiet or was the theater quiet? Which was it?
Yeah, it was A Quiet Place. The movie theater's quiet, and now I'm just hearing myself crunching over and over again. And the last thing I will mention, too, about the concessions is AMC has... I've never seen a movie theater try so hard with their food either. Like, they're adding pizza, nachos, and everything. No one's going for it. No one's buying it.
Yeah. So I don't know. And we just want to kind of look at, investing. And I was curious how the movie theaters look now. I will go back to the lot. There's one in La Jolla, one in Sports Arena. I think it's called Sports Arena.
Liberty Station.
Liberty Station, that's right. Those are very nice, but they are expensive.
I would also suggest Landmark Cinemas. It's owned by Dallas Maverick guy, Mark Cuban.
Mark Cuban.
Yeah. There's one in Hillcrest. That's a very nice theater as well. I will say.
Okay.
Showing a lot of indie movies.
How's the
there, so.
parking though? That's always important. The parking. How's the parking down there?
You know.
All right. Well, that's important too. So, all right. Phone number is 866-577-2473. That's 866-577-2473.
You know, I did want to also talk. I mean, we talked a lot about AMC and kind of how they were part of the short squeeze. They call themselves the apes, the Reddit trade. You know, we actually did take a look at another company that got some popularity on Reddit earlier this year in Bed Bath & Beyond, and we did that actually on our YouTube channel, Smart Investing with Brent and Chase Wilsey. You know, you can go there, kind of check that out as another business that we did take a look at. And I mean, they were down, about 30% this week. So, you know, we said, hey, maybe there's an opportunity here. The numbers look kind of interesting on it. I've talked a little bit more about the story of what happened. So you're interested in looking at Bed Bath & Beyond, want some good details on that, be sure to go check out our YouTube channel. Again, that's Smart Investing with Brent and Chase Wilson. You can subscribe there for our Smart Investing weekly stock analysis where we're breaking down different companies that are quite popular in the news. As I said, Bed Bath & Beyond was a big mover this past week, so want to take a closer look at that. I will say it is weekly stock analysis. It's a little secret we missed last week because we were preparing for our investment symposium. So, well, it's not weekly. Almost weekly. Majority weekly.
We try very hard, so we'll do that. But again, if they subscribe, they'll know for sure when we do it.
Yep.
And don't forget to tell your friends and neighbors and relatives about it as well so they can do it as well. Because again, we give a pretty good analysis and we try to help people understand more about investing. That's what we're trying to do. All right, let's go to the phones here. Let's go up to Oceanside and speak with Carl. Carl, you're in the Smart Investing with Brent Chase. How can we help you?
Yes, Bonanza Creek Energy, BCEI. It's a small oil company with 190 employees.
Oh, wow. That is pretty small.
And I remember...
What's that?
I remember taking a
Do
look
they
at
make
this.
money?
Yeah, I remember taking a look at this a while ago, and the numbers look really good on it quite a while ago. I'm curious to see how things look as the energy market's kind of changed.
And Carl, do you hold this or looking at buying it?
I was thinking buying it, and I made some money on the XOP, on the Oil Explorer, and I got out, but it seems to go higher, the oil. So I came across that BCEI, but it's such a small company, and they even pay a dividend.
Yeah, well, let's take a look at Bonanza Creek Energy. Their symbol is BCEI. They are in the industry of oil and gas, E&P. I do see short shares, about 11.9%. Not too bad, but that could be a little issue going forward if that gets much higher. We do see a PE ratio of 23.9. That's better than the industry at 100 plus. We do see price to sales 3.3. That's more expensive than the industry at 2.7. Price to tangible book value looking very good. It's 1.1 for Bonanza Creek, but yet the industry is at 4.4. Price to cash flow checks in at 6.8. That's also better than the industry at 7. And then a PEG ratio going forward, 0.5 versus 3.1. And you like a low PEG ratio, and they've got that. Looking at their earnings per share growth for the last year, it's growing at 6.8% for Bonanza Creek. That's not as good as the industry at 69%. However, sales for the 1 year change, they have increased by 49.6%, which is better than the industry at 15.8%. They do pay a dividend, a $1.40 dividend. The industry about $1.36. The yield, I thought it'd be higher than this, but it's 2.9% versus 2.2%. But what's great about this is they only use about 17% of their earnings to pay that out. Now, we do see that on the balance sheet, you got a current ratio of 0.6 versus 1.7. That could be a problem because that's not a lot of liquidity. It's not terrible, but you want to see how their cash flow is doing. How much cash do they really have? Because that's kind of low. I like to have at least 0.8, 0.9, and again they're at 0.6 or about 60%. Debt to equity, however, does look good. It is 20% versus 70% for the industry. We do see a net profit margin of 10.9%, well above the industry at 1.5. We have return on equity of 2.8% not quite as good as the industry at 4.8. Chase, what do you got going forward for Bonanza Creek Energy?
Yeah, so taking a look here at the current price, $49.04. 52-week high, $50.98. And gosh, I don't remember how long ago we looked at this. I remember it being a while ago, but I just remember the numbers looking pretty good. It was just too small for us, so we couldn't buy it at our firm. But the 52-week low here, $15.88. So, I mean, it's done tremendously. Year to date, it's up about 158%. I mean, it's been a very, very strong gainer here and actually grown into not too small of a company as the market cap's grown to about, I think, $1.5 billion. So it's not super small, Carl. I wouldn't be worried about the size of that. I did look up what they do as well because I was curious exactly on the energy side, but they do oil and natural gas. And I'm curious on the breakdown of how much their business is nat gas because we've seen that price spike tremendously. And I don't think that price is going anywhere through the end of this year due to the supply constraints. And also, if we have a cold winter, gosh, to be frank, I don't know what we're going to do. I think you're going to see nat gas prices climb even further, which, could benefit a company like this.
Yeah, and you do want to find out how much of natural gas they actually have. That's very important. Could be 5%, could be 50%. Do they have earnings going forward? Yeah, and I look out to December 2022. I will say I quite pleasantly surprised here with 5 analysts. That's a good number. Most of the time, I don't like to see anything less than 5. Right. 5 I'm okay with, especially for a company this size. Yeah. That's why I was a little bit surprised. I will point out the discrepancy here between the low and the high. Whew. Low is $4.78 and the high $11.81. Does give us an average estimated earnings per share of $7.79. I mean, that gives us a target sell price of $129.31. So that looks very attractive. I just don't know how likely that sell price is. And the range of those estimates could be because of them betting on what's going to happen this winter. Yep. It's cold back east, and people use a lot more natural gas before heating their homes. That will increase the price of natural gas. Maybe we could see that $7, $8. Was that British BTUs, I think, or a million BTUs or something. I forget how they measure it. But that could really make a big change. If we have a warm winter back east through the Midwest, well, it probably won't push natural gas up as much. So that's what you're kind of betting on here. But again, it's not something I would feel comfortable with it because that range is so high. But I'm not going to say, Carl, it's a bad investment. Yeah, and I know you already told us, Carl, but did you say you hold it here?
No,
you're looking at buying it.
I was. I sold XOP, the Oil Explorer ETF, and I made a little bit money on there. And then I looked at other oil companies, and I came across that little one here. And because it is so little, so small, I'm wondering if they really will stay in business,
Yeah, I'm not worried about them going out of business. Their debt to equity is quite strong, but I don't think I'd get in at this price. I'd be patient. You might miss it, to be frank, but I think you are going to see. I mean, we've seen nat gas kind of move around pretty heavily this last week. So I'd be patient with it. Watch a little bit more, do a little bit more research. But as Brent said, I think there's some potential there with this company.
A little bit worried about the quick ratio, the current ratio. Check the cash flow. And then also, too, check to see how much, again, their business derives from natural gas. I mean, if it's high amount, we have a cold winter, this stock right now, 49? We could see it, I'm going to say, maybe 70s or 80s if you have a cold winter back east. So, all right, Carl?
Okay, thank you.
All right, thank you for calling. You have a good one. Bye-bye. All right, that does open the phone line, 866-577-2473. That's 866-577-2473. Oh, did you have something? Oh, okay, no. All right, well let's go out to San Diego and speak with David. David, you're in the Smart Investor with Brent Chase. How can we help you out?
Hi, good morning. I was interested in your comments on Bank of Nova Scotia, BNS, and they just had pretty good quarterly earnings growth year over year, and see what you think about it.
Okay. And David, do you hold that or looking to buy it?
Yes, I've held it for some time, have a fair profit in it, but thinking, well, maybe invest a little more in it.
Okay. Well, let's take a look at Bank of Nova Scotia. Their symbol is BNS. I do see they're in the industry of a regional bank, so they're not a big money center bank. They're a small regional bank. I do see 55% is owned by the institutional side. A pretty good start here on the valuations. PE ratio is 11. That's below the industry at 12.7. Price to sales, however, is higher than the industry, 3.1 versus 2.1. Price to tangible book value, 2 versus 1.5. And then price to cash flow, not material for Bank of Nova Scotia versus 1.6 for the industry. Now, you do have a good PEG ratio of 0.8 versus 3.7, so that's a positive. Looking at the earnings, we do see for the 1 year change, they've increased by 27.2% for Bank of Nova Scotia, which is very good, but the industry is up 63.3%. For the last 5 years, up 5%, which also is below the industry at 15.1%. Now, the sales for the last year down 1.2%, industry up 6.1%, and 5 year change on sales is 4.2% versus 0.3%. So I think a good number there is for the 5 year sales growth, but kind of disappointed in the earnings growth. I wish that was a little bit higher. Looking at the dividend, they do pay a dividend, a $2.81 dividend. That gives you a nice yield of 4.6%, and they only use 63.5% of the earnings to pay that out. However, the industry does have a payout ratio of only 24%, but I'm okay with a 63% payout ratio. I think that'd be fine. We also do see that they have a current ratio. Well, it's a bank, so no current ratio. Debt to equity, 10% versus 140% for the industry, so that's good. Not a lot of a debt there they have. Net profit margin looking pretty good, 28.8 versus 21.4. Return on equity is 12.5 versus 9.5. And I'm kind of mixed on this. It depends, I think, what you come up with the numbers going forward, Chase.
Yeah, so we'll start here with the current price for the Bank of Nova Scotia. It's $62.18. The 52-week high here, $68.02. And the 52-week low is $40.28. So I see here the year-to-date return up about 19%. It's done pretty well. I know financials have kind of started I'm going to say a nice little run here, and I do like the financial sector. Now, not too familiar with the Bank of Nova Scotia, not quite sure exactly what their products look like, what their kind of lending targets are, what businesses or consumers they're trying to attract there. But I do like the financial sector. Now, I do see that going forward that they're trading in a very reasonable valuation. I say that because the estimated earnings per share in October 2022, $6.28 would give us a target sell price of $104.25. I mean, it trades at a forward PE of about, call it 10. So, I mean, very, very attractive there. I like the valuations on it, David. I don't know enough about the Bank of Nova Scotia to feel super comfortable with the investment.
And Chase, that's a good thing to look at, David, because you want to understand how they get their business from, because they could be very reliant on, we'll say, car loans, because they're not a big money center bank, and big money center banks can do like offerings, debt issues, and do a lot of other things, where generally your regional banks would do your credit cards, your home loans, and bank car loans and stuff like that. Well, we're seeing from the car companies saying they're having a hard time getting cars. Well, if they're not getting cars to sell, then the car loans will go down. So you really want to understand Bank of Nova Scotia, how do they make their money? Is a lot from car loans? Is it from home loans? We also think that home loans could be kind of over the next year or so slowing down as we see rates increase. So it's something you want to be kind of careful here with. And I'm also curious too, is Bank of Nova Scotia, are they in Canada? Because Nova Scotia is, I think, in Canada. So I'm kind of curious on that, where their locations are. All righty?
Okay. Thanks much.
Okay, David, thanks for calling. Have a good one.
Okay. You too. Bye-bye.
Bye-bye. All right, that opens the phone line, 866-577-2473. That's 866-577-2473. And Chase, I know we've kind of like the banks, and actually they went up because actually the 10-year Treasury, I'm sure you saw this week, went above 1.5%, which is positive for banks, but you got to be careful also, too, it doesn't go too high too quick, because I think that could turn a negative for banks.
Yeah, and I do know it pulled back a little bit, but it is hovering around 1.5, and I continue to think you could see it spike even further to 1.75 by the end of the year. I think that's where we'll see it end by the end of the year is about 1.5 to 1.75 is within that range.
Yeah, I'm still holding my 2% range. So we'll see. I mean, I just think
Time's ticking.
Time's
We're in
ticking.
October.
We still got plenty of time. We got
3 months.
3 months. Yeah, so we'll see. But maybe it'll come out 1.9. So right in the
We'll
middle.
see.
All right, T. Let's go back to the calls here. Let's go back up to Oceanside and speak with Michael. Michael, you're on the Smart Invest Show. Brent Chase. How can I help you?
How we doing? I'm looking at AMRS, kind of a leading edge manufacturer of synthetic molecules they have a sugar replacement product that's been selling fairly well, and cosmetics, squalene replacement.
Oh, and you said sugar replacement product. Like
yeah, they make a number of different products that basically taste like sugar. They're made from sugar, so it's not a chemical per se. I mean, it's synthetically made, and it's diabetic friendly. And then they also do cosmetics, which are, as you may or may not know, are not made from the greatest stuff.
Right. I know, because we got saccharin and all these other ones that have been for years. I think there's about 4 or 5 different ones you can use now on the table.
I'll say that's an interesting mix: sugar and cosmetics. I think it all revolves around chemical.
I bought it at around 10, and it made a run to 20. And there's some good news in the pipeline, and I think now it's currently sitting at around 14 or something. So.
All right. Well, let's take a look. I think the company's called Amyris, is the way I'm going to say it. Yep. Okay.
Correct.
Symbol AMRS. I do say again, they're in the special chemicals industry, which is sugar, cosmetics, everything else, I guess. We do see only 10.4% shares on float. Institutional ownership, about 47%. Now, disappointing here, when I look at the valuation ratios, the only one that I see is price to sales at 10.5, which is well above the industry at 2.1. So there's no price to earnings, no PE ratio, no price to book value, no price to cash flow. So it kind of tells me perhaps they have no book value, they have no cash flow, and they have no earnings, which means this is more of a speculative company that hopefully these things you're talking about come through. So there's no change on earnings going forward. Now here's the bright side you're probably looking at. For the 1 year change on their sales, they're up 156%, well above the industry at 55.8, and they do have a 5-year sales growth of 44% versus 12.6. So that is good. We do not see there's no dividend, no buybacks, or actually issuing shares. On the balance sheet, very important with these type of companies, you do have a good current ratio of 3.7 versus 1.9. No debt to equity, because I don't believe they have any equity, which would scare me somewhat. We do see intangible assets are about 2.7% versus 37%. So not a lot of intangibles, which is good. We do see a net profit margin. Yep, a negative 119% versus a positive 6.7%. So the company's still losing money with these, we'll call it exploratory products that they're coming out with. We do see net profit margin. No, I just did that. But return on equity, wow, 398 versus 8.4. And I'd really want to look at the balance sheet, because it doesn't look like they have equity, but then they have return on equity. So there's something on that that's a little bit strange. Chase, what do you got? Any numbers going forward on this one?
Yeah, just looking here to start with on the current price, you were right there. Current price is around 14, the exact $13.91. 52-week high was $23.42. 52-week low, well, that was $1.88. So it's definitely exploded off that low there. Year to date, up about 125%. The 1 year return, 347%. So I think perhaps some of their products are gaining some steam here, gaining some approval. And I mean, that's really what I think this is going to come down to, is how they expand, obviously. Because I look for, there's no estimated earnings for 2022, so can't derive a target sell price on it. It is going to be based off of perhaps them winning some contracts and maybe getting some further approvals on their research there. So I know it's not a biotech company, but it's kind of, I think, going to trade like a biotech, where it's going to be dependent on, well, are these items going to come through for the business, and are they going to be able to, kind of gain steam and generate sales?
What about earnings going forward?
I said no earnings.
Oh, no earnings going forward. Okay, so then, so this is one that, again, is very speculative. we would not buy it in our portfolio. I mean, you're still up on it. It's just so hard to see how this is going to do going forward because you're speculating on these products they have. And I think you said it was up, you had it at 20. Actually, the high was, you said, what, 23.42, now at 13. This becomes a hard part because now you kind of feel like the price will go back to 20 and it could go back down to 5 or 6. So very speculative there, Michael. Michael?
Yeah.
Yeah. So it's speculative. If you want to take the ride with it, you can do that. But it's just for us, it'd be too speculative.
It's just a portion of my speculative. I agree with you. I don't have a lot of these, but this one kind of looked good. I went in for 100 shares at $900, and if it takes off, I'm willing to sit on it for a while, see what happens.
It kind of fulfills that gambling.
This one's kind of a gamble. I got the rest of it's in more dividend. I'm a retiree, so I probably have the majority of it in good, solid blue chip dividends right now, industrials and some other things like that are pretty solid. Some Exxon, and I got a lot of other stocks. I got SRE, Sempra, and
you got
solid stuff.
Yeah, and this was just to fulfill the gambling need that you have and that little gambling itch there. There we go. Well, Michael, good luck to you on that one, and you kind of know the rules are on it, so good luck with it.
Yeah. All right, take care. Thanks.
Okay, bye-bye. All right, that does open the phone line, 866-577-2473. That's 866-577-2473. And I look over, and it's time to talk about financial planning with Harrison Johnson. Good morning, Harrison. How you doing?
Good morning, guys. Doing well. How are you doing?
Good. I heard now you're traveling to Dallas here. Is that where you're at now, Dallas?
I know. Every time I meet somebody new, they're like, "Oh, you're the guy that travels all the time." And now I'm in Dallas. So.
Well, I used to love Dallas. It's still beautiful. How's things in Dallas, real quick?
It's nice. It rained a little bit yesterday. I think it might rain today. It's more humid here than San Diego, but this actually is a little bit of a vacation. Usually when I'm out of town, I'm just visiting family, so it's not really a vacation. But we had some flight credits that were expiring, so I had to go somewhere close and cheap. So this is how I ended up in Dallas.
Yeah, well, I think Dallas used to be pretty good. I have good memories of Dallas. So, but I know today you're going to talk about the changes coming to Roth accounts. Well, what's the changes going on here?
So, all because Congress figured out that Peter Thiel had $5 billion in his Roth IRA. They think that Roth accounts are some huge loophole that the rich people exploit all the time to become more rich and avoid taxes and everything. So they think that if they crack down on Roth, that they'll solve everybody's problems, which I don't think is true at all. But there are some proposals that are being talked about and could become law here as they're trying to get some of these spending packages pushed through. So one of the pieces is they want to do away with after-tax contributions to traditional IRAs and then the ability to convert those after-tax contributions over to Roth. So this would do away with backdoor Roth IRAs and also mega backdoor Roth IRAs. So basically, if your income is too high, which isn't really that high from a threshold perspective, but they would do away with the ability to convert those after-tax dollars over into a Roth, which, again, backdoor Roth IRAs would be no more. If that does go into play, it looks like this year you could still do it, 2021, but starting in 2022, we'll not be able to do that anymore. The second part that they're talking about is doing away with conversions for people with taxable incomes, married couples above $450,000 and single people taxable income over $400,000. Now, that one, I don't think it's as big of a deal because if your taxable income is at that level, you're already in close to the highest tax bracket, so conversion might not make as much sense anyway. Usually you want to do it.
Sorry to interrupt you, Harrison. Are they stupid? Do they not want tax revenue when you convert your money from a traditional to a Roth at that high tax? You get the money now. Why would they take away that conversion? It's crazy.
These people have no idea how taxes work. They just try to find ways to increase revenue and then close loopholes and all that, but they don't actually know how it works. They don't read these bills that they create. So, I've also heard that they want to do away with Roth conversions altogether. I don't think that itself will be done, and at least I hope not. But conversions above a certain income threshold, it's possible. Again, from a planning perspective, I think it's okay because you don't really want to convert at that level. But I don't like the fact that they're trying to crack down on regulations with that. So those are two of the things that might come through. Again, I hope neither of it does. I hope none of the stuff goes through, but it is something to keep an eye out for.
And Harrison, I got to say, too, because I do kind of warn people down the road, 20, 30 years, that I think the government will find some way to tax these Roth IRAs because, like, wow, there's billions and billions and hundreds of billions of dollars in these Roth IRAs, and people say, oh, the government can never do that. I think we're starting to see the beginning of this by them taking away these little things now, saying, oh, well, here's some revenue, even though we kind of point out that they're kind of shooting themselves in the foot, but that they will change things because, oh, the rich people have that. That's not fair. That's what worries me when these Roth conversions where you convert and you pay the taxes, but then you might take it out 20 years down the road. I believe, and I'm sorry, I don't trust the government, that the government could tax those Roths down the way. Some way they're going to do that. So
I definitely think it's a possibility, and it's too bad because they say that this is something against the rich, but this is something that everyday Americans use to benefit their own financial situation. So, but yeah, even if it's not a direct tax on it, I mean, a wealth tax could indirectly do it, or some other crafty way that they, hasn't been talked about yet. It is possible.
Yeah, and I do want to say, too, with Peter Thiel, it was just such a unique situation where I think he used, like, his personal shares in PayPal pre-IPO, and it just exploded. And that's how it grew to such an exorbitant amount. And that is one man. And now they're trying to change the entire tax code just because one guy was able to do it. And they already kind of cut off that loophole that he used to generate that type of wealth. And that's what concerned me, as he said, is it spreads from, oh, Peter Thiel did this, and now we got to crack down. And as he said, it affects everyday Americans rather than just somebody that's already a billionaire anyways.
Yeah.
Yeah, exactly. And with the Peter Thiel thing, I looked at the amount he contributed relative to what it grew to. And in order to get that type of growth, his annual return was over 100%. I mean, PayPal became a massive company and everything. So, yeah, it's, oh, these rich people, Peter Thiel, billionaires. And it's just there's no connection between what he did and what current people are doing with using those types of accounts. So I think it's terrible.
Yeah, and actually what the government does is that they keep lowering the level of what they consider rich people. And here in California, it's very difficult because to afford a home, you have to be, quote unquote, rich to afford a home compared to the rest of the nation. So you kind of get hurt here in California. This is why you need a good financial planner on how to get around things. So you're not get around things, but how to deal with things. Yeah. So, well, Harrison, we're going to let you get back to your vacation there. Thanks for Are you in the office on Monday?
Yes, I am.
All right. Well, we'll see you on Monday. Enjoy your vacation.
All right. Thanks, guys. We'll see you Monday.
Okay. All right. That is Harrison Johnson, our CFP, our financial planner at Wilsey Asset Management. You want to talk to him, give him a call at the office at 858-546-4306. Again, that's 858-546-4306, or visit the website smartinvesting2000.com. That's smartinvesting2000.com. You can do a free consultation with him to see what your situation looks like, to see if financial planning can benefit you. And many times it is tell people, compare. You might already have a financial planner, but compare the differences. Kind of like when you go shopping for a car, compare the differences. So,
yep.
All right, let's get back to the phones here. Gosh, we got a lot of backed up here. Let's go to San Diego and speak with Tim. Tim, you're on the Smart Investor Brent Chase. How can
Tim
we help
just
you?
actually hung up. I'm sorry.
Oh, shoot. We just lost Tim. Okay.
And we lost Carlos, too.
And we lost Carlos, too. Okay, well, the next thing I was going to do is go to the Facebook side because, Facebook.
We got Frederick here.
Yeah.
I see he wants us to comment on, and I always kind of like this company, Bristol Myers. Bristol Myers Squibb.
Right.
BMY is that ticker symbol. Says it's down 11% the last month. What do we think? Thank you.
All right. Well, let's say it's a Bristol Myers Squibb. Symbol is BMY. We do see. Oh, I got the wrong information here. Let me kind of slide to the top here. Let's see. Okay, so then the industry of drug manufacturers, general as they're called, not much float in this stock at all. It's only 0.9%. It is owned by institutions. About 76% of the shares are owned by institutions. Now, I am surprised here. No PE ratio versus 29.7 for the industry. Price of sales looks good at 3 versus 4. Price to tangible book value, nothing for them and nothing for the industry. And price to cash flow, 10.7 for Bristol Myers versus 14.7 for the industry. I do see a PEG ratio of 1.1 versus 1.5, so that's positive. Looking at their earnings per share growth, no growth for the 1 year or the 5 year. Sales growth, now sales were up 12.7% for the past year versus 8.2, and their 5-year sales growth is 19.1%, well above the industry at 3.1. So they're doing some good things here with the this growth of the sales. Look at the dividend. They do pay a $1.96 per share dividend. The yield, 3.3%. That's just slightly above the industry at 3%. No dividend payout ratio because they have no earnings. And this is something you got to find out why there's no earnings, because perhaps it's accounting write-off. Something happened here to cause that, because they got nice sales growth, and you don't want that dividend cut because their earnings are not doing well. We do see they buy back shares, though. 3.4% was what we call the buyback yield versus 0.7%. Look at the balance sheet. Got a current ratio of 1.5. That is the same as the industry. Debt to equity, 130% versus 140%. I'm okay with that debt to equity of 130% if they've got good cash flow and everything else. Looking at the net margin, well, here it is. Profit margin, a negative 11.4 versus a positive 14.2. So they did take some write-offs. Return on equity is also a negative 13.8 versus a positive 22.3. Chase, what do you got for the earnings going forward?
And I do want to say on the earnings side, I'm willing to bet it has something to do with mergers and acquisitions. And I mean, this company.
What's going on with them? Do you remember?
I just know they're heavily involved with buying other companies. Gosh, a few years ago, I remember they had a huge acquisition, and I just look at their intangibles as a percentage of their total assets, about 62%. So I'm just, again, speculating here, but going with my conviction. Yeah. A lot of goodwill here. I'm guessing that the lack of earnings has to do with write-downs associated with different acquisitions or potentially integration costs as well.
Yeah.
Sometimes it takes a little bit of time and a little bit of expense to get that rolling. But let's take a look at the numbers going forward for Bristol Myers, see how the valuations look on that side. To begin, I do want to take a look at the current price of $59.51. Has fallen from the 52-week high, as Frederick said, at $69.75 and gotten close to the low of $56.75. Year to date, pretty much gone nowhere. It's down 1.8%. Now going forward, Bristol Myers, looks like December 2022, they're estimated to make $8.03. And nice pot of analysts here at 18. The range, not too bad. The low 747, the high 865. Again, based on that average estimate earnings of $8.03, we get a target of $133.30. Valuation side for Bristol Myers looks very, very strong. So I think it's intriguing. The debt to equity was a little bit beyond where I like to see it. But from a value standpoint, looks interesting. But again, you got to understand what's going on with those trailing 12 months of earnings.
And I know we've looked at this company a couple times ourselves, and I forget why we just kind of back away from it.
The intangibles.
The intangibles, yeah, because it is a high intangibles. And again, it could be a lot of goodwill because they have done a lot of acquisitions. But there still could be something here. We have bought other companies with high intangibles because it was so strong. I mean, I'm not going to say we're going to buy this next week, but I'm saying this one still, I just have I like what I'm seeing, but I'd want to understand the intangibles more, because if they're good, strong intangible assets we don't see any write-downs coming through, I mean, this could be a good long-term buy here.
Yeah, no, absolutely. So I think there's some potential, to say the least.
Yeah. Well, I looked over and everybody hung up on us. I mean, I guess we weren't patient.
I guess maybe we knew that the hour's coming to a close here.
Yeah, and actually, I know some people call, waiting in line for groceries or at the drive-thru or something, so they hung up. But we do have a few minutes, and I think that Carlos, was holding the longest. Oh, no, it was Tim. I was going to go to Tim. So let's go back. I know Tim hung up already. But he wanted to look at, let's see, the symbol was FLMN. So let's just take a look at that for him. Hopefully he's still listening here. I got to put the symbol in right, or else it doesn't work very good.
Looks like it's Falcon not Materials, Falcon Minerals Corporation.
Yes. And I did pull it up before we went to them. And I did kind of have some interest in that because minerals and stuff are something that could be doing good going forward. I do see that it is Falcon Materials.
Minerals, yeah.
But they are in the material. They're not in the material industry. They're in the oil and gas EP industry.
Interesting.
Yeah, so they're not really materials or minerals. I guess you could consider oil and gas a mineral, I guess.
Yep.
Anyways, shares float a very low 1.6%. Institutional ownership, 63%. No PE ratio. We do have a price to sales that's high, 4.8 versus 2.7. Price to book, 1.8 versus 2. We do see price to cash flow, 7.7 versus 7. And your PEG ratio, 5.6 versus 3.1. Now, you want that lower than higher, so that's not good for Falcon Materials. They have no earnings per share growth over the last year. Sales only for the 1 year up 12.7 versus 15.8. They do pay a dividend. This is probably what attracts people, which I want to be very careful here. They have a 12% dividend yield.
Wow.
We know that cannot be sustainable with what they're showing on their earnings and so forth. So I think that will probably be cut, if not eliminated down the road. We also see on the balance sheet, current ratio 1.7, same as the industry. Debt to equity is only 30%. That's good versus 70% for the industry. Net profit margin, again, losing. It's a negative 5.7% versus a positive 1.5. And return on equity is a negative 2 versus 4.8. Do you have anything on the earnings for this Falcon Materials?
Yeah, so looking at Falcon Minerals, the current price is $5.02. 52-week high here, $5.39. And wow, 52-week low, $1.82. Gosh, that means if you bought it at $1.82, your dividend yield is crazy high.
Very high, yeah.
But I did also look at what this business does, and they actually own they acquire and own the mineral royalty and overriding royalty interest in oil and natural gas properties. So I wonder if they're getting the royalties from these, which is why they're passing along. I do wonder if it is a special dividend, though. I don't know if it's a recurring 12% yield. That just seems to be exorbitantly high, especially based where that price was. But I look forward on this business. Estimated earnings in 2022, December 2022, 34 cents. Gives us a target sell price of $5.64, so still above that current level. But again, I think this is going to hinge quite heavily off natural gas, which could go higher. But I don't know. It's just weird. Whenever I see a 12% yield, it's too good to be true.
Yeah. And the other thing I don't like, too, is
could be too good to be true.
They don't actually produce things. They're actually basing off of royalties. Now, what the problem with that I see, lawsuits. Yeah. Eventually, you're not really entitled to those, and we're going to fight on this, and all of a sudden they start spending money to defend. I've seen that with like patents and stuff like that. You start spending money to defend those. So I'm just not excited they get money out for royalties. I'd rather have them actually pumping out oil.
This is a very small company too. It's just a market cap of $408 million. So again, you divide that by, I'm just going to do it easy, by 5, because that's about where they were trading, and it puts you at less than $100 million. Market cap is where they were at just 52 weeks ago.
Yeah, and you just got to be very careful of those companies, because they can do extremely well and you can make a lot of money off them, or they can be gone, and then they go from trading the big board to the pink sheets, and you never hear about them again. And then you got that lack of a market where you got all these shares and you can't sell them because nobody wants them. So
yeah,
and you may think it's worth something, but I talked to somebody the other day. They go, well, yeah, it was worth like $10 a share, but I can't sell them. I go, well, that's not worth $10 a share. It's worth 0. If nobody wants them, it's not worth $10 a share.
It's like saying my house is worth $2 million, but people only give me $1 million for it. I don't get it.
Right.
Well, I mean, your house is worth $1 million.
And you know what's funny? How now, just as an example, you use $1 million house as an example. You used to be like, well, my house is worth $400,000. Yeah. Things have changed, and they will continue to change. So
yeah.
All righty. Well, I can see Brandon, they're counting. I got 1 second. There we go. There's a closing bell. I knew it was coming up. So thank you for listening to Smart Investing Show. It is for informational purposes only and should not be used as investment advice. If you'd like to discuss in more detail your investment needs, have other investment questions, feel free to call myself, Brent Wilsey, or Chase Wilsey at 858-546-4306. That's 858-546-4306. Or visit our website, smartinvesting2000.com. That's smartinvesting2000.com. And for more daily educational information on investment tips, go to our Facebook page, Smart Investing with Brent and Chase Wilsey. Stay tuned. Actually, the closing song is performed by Roman Palacios, Frank Sinatra's My Way. Have a great day. We'll talk more next week right here on the Smart Investing Show.
I did all that, and may I say, not in a shop.
This program is sponsored by Wilsey Asset Management.